Good day, everyone. This is Gary Ender from ShrewdTrading.com. We're looking at the S&P 500. There are many things going on with the S&P 500 right now that are suggesting that this upward momentum will soon run out. We're going to see a turn in this market, and we're going to see much lower prices ahead. Now, the ECB and the Fed will do whatever they can to try to hold the S&P 500 and the other indexes up. But traders are starting to see through that, and each time that they do something, it has less of an impact, and the duration of the effect will be much less. As a matter of fact, we're still in this bearish wedge in the S&P 500. Now, the top of this bearish wedge is getting up towards these major resistance levels. And this whole move, the whole move that happened on Thursday and Friday of last week, which is the 26th and 27th of July, is one big news event. This is Draghi from the ECB talking about what he's going to do to try to fix some of the issues that they have in some of the Euro countries. So you see people cover shorts, you see some people take some long positions, but each time we have this, we develop more divergences, and this thing is just ripe for rolling over sometime, we'll say in the next few weeks. We'll know by the price action when it starts, but right now it's giving us all the warning signs that this thing is going to roll over and we'll be seeing much lower prices in the somewhat near future. Now, if we look at this high in the S&P 500, here's our stochastics. Matter of fact, if we move in a little bit closer on this, we see this high. I was saying to our Market Check subscribers as this was moving back up and we were making this high that it looks like we're going to develop a lower high in stochastics. We'll have a stochastics bearish divergence, and in fact that happened. Now look what happens. We make on Friday, we make a new high. We close above this level and above this level, and look where our stochastics is. You can see this on different time frames. You can see this on many different markets. You can find many other divergences that are happening right now, not only just with indicators, but we have intermarket divergences as well. So if we see what's happening with the S&P 500, let me zoom out on this a little bit again. So we see what's happening with the S&P 500. If we switch to the NASDAQ 100, look what's happening here. We have a high, we have an equal high. The S&P 500 pushed up to a new high in here. We're not seeing that with the NASDAQ. When we have a healthy market, the NASDAQ is usually pushing ahead of the Dow and the S&P. And right now we've got the Dow and the S&P breaking out without the NASDAQ 100 or the Russell 2000. And you can also see the divergence here in the stochastics where we have a high, we have a lower high, and this is a high. We'll call this an equal high. And right now, look how stochastics are lagging when prices almost to those same levels again, and we see our stochastics just starting to cross over here. Switching to the Russell, we have a high, a lower high, and again, look how much lower this price point is than what we're seeing in the S&P 500. So we have divergences with indicators. We have divergences when one market's compared to another market. Usually, when the market's healthy and moving up, we've got the small caps and the NASDAQ 100 stocks at least equal to and typically out in front of the stocks of the S&P 500. If we go to a longer term weekly view of the S&P 500, we see the low that we had in here, the low that we had in here. We see the swing high, very important swing high that we had in here, and we see prices moving up towards that level again. So this is the two trend lines that I had on the daily chart. One right here and one right here are marking those two swing highs. And although on this weekly chart we see that we have a low, we have a higher low, we have yet another higher low, this is still in an uptrend. And I haven't said this is rolled over yet. I said that we're getting close to the point where the odds are that this is going to roll over by the price action that we're seeing with different markets, different indicators. And when this rolls over, we're going to see much lower prices. Look at the stochastics here where we have this price point. We see where our stochastics are here. We're almost up to that level again, and our stochastics are what? A little more than halfway up to that same level. If I remove this trend line, we also see that the upper Bollinger Band on the weekly chart is up in this area as well. As I move back to the daily chart, we know that this week we have a lot of data, including a Fed meeting. The only time this market seems like it gets a good move to the upside is when there's a Fed rumor, an ECB rumor, or they're making some type of a statement that they're going to come and try to push these markets higher by additional quantitative easing. There's just no way that that can go on forever. And in my opinion, they're causing more damage than if they would stop manipulating the markets and let the markets move naturally with what's happening in investors' minds and with the economic situation. So I believe the odds are very good that sometime maybe this week or probably no later than next week, based on what I'm seeing on these charts, that these markets are going to roll over. We'll probably see high volume selling, and we're going to see much lower prices in the S&P 500 and the other indexes. Now, as this develops one way or the other, I will continually post new updates to this on the main page of shrewdtrading.com. And of course, if you want much more in-depth analysis of what's going on with this market and many more in relation to our Shrewd Trading model, the STM, you can check out Market Check, which is one of our features to keep traders on the right side of the trade. Shrewd Trading, and keep a close eye on what's happening with this S&P 500 right now.